principal or general manager. We're going to talk about mergers, buyouts, new construction, partner buyouts. We're going to talk about how to get capital. There's dealers watching this broadcast right now. There's general managers watching this broadcast right now. Your ambitions go far beyond your available cash. Today, from Capital Automotive, the incoming CEO, uh, uh, a guy that has recently become one of my
President
better
and
friends,
COO.
Dan Garces. Hey, big guy.
Hey, good morning. How are you?
I'm having the best day. Can you tell?
Absolutely. And I'm thrilled to be on here, and I appreciate this time and that you're spending with us.
Well, fantastic. But let me ask you, Capital Automotive, what do you do?
Well, let me explain that. So first, I'm incoming president and COO. What our company does, we've been in this business for now 26 years. We provide capital to dealers. We're a finance source for dealers that are growing, that are looking for alternative ways to finance their business. And we do it through a sale-leaseback transaction on the real estate. So we can provide.
You said that kind of quickly.
Yeah.
Lease buyback?
Yeah, sale-leaseback. So we provide capital using the real estate. We buy the real estate from the dealer, and we pay them the full value of that real estate. And they take all the capital that they had. They have frozen equity in that real estate. They may have 20% or 30% down on that property, and they use that capital for growth, to buy more stores, to get bigger and have better returns on the operations that they're buying versus the real estate that they're sitting on.
Dan, I said in the introduction that and I love that line. You're welcome to use it. Does your ambition outdistance your money?
That's a good line. I don't know about you, but as far as I know, most of us have limits on capital, and finding great ways and great partners to deliver capital to your business is really important.
There's a lot of dealer partners have a buyout option, but they just haven't got the cash. We're going to be talking about that. So Capital Automotive, 26 years in business. You're not the new kid on the block.
That's right.
Have you done this before?
We certainly have. I mean, we've been doing it for a long time. Before I joined Capital Automotive, I was a commercial lender for about 10 years. And in that time, I was lending to car dealers. So that's really how I got into the car business. Was being a commercial lender to car dealers. Loved the entrepreneurial spirit, loved all my clients, working with them and helping them grow their business. And, that's really where, the car business got into my blood. 10 years into my career, I had the opportunity to join cars, and that was, can't believe it, 21 years ago today now. So I've been at Capital Automotive now for 21 years, but, working with dealers all the time and, just enjoying every minute of it.
Well, you gave me a list of questions, and I want to go through the questions, but I generally ad lib a little bit, if you don't mind.
Yeah.
Okay, let's start out. What's happening in the marketplace today? Let's talk about all the mergers, the acquisitions. We're talking about the single operators all of a sudden own 20 stores. I mean, going, holy cow! I mean, I've seen this big market shift, and it seems like the public companies are bailing out of a lot of properties, and private dealers are expanding to mega dealers concept.
Sure, and you're right, Jim. I mean, the buy-sell activity is not showing any signs of slowing down. I mean, already in 2024, we've seen, it's January 26th today, and we've seen several announcements of buy-sells just this year. I mean, the transaction count was over 700 for the last few years of buy-sell activity, and that's more than we've seen in decades. So I think the thing that's kind of scary for new dealers and people trying to enter the space is the price of these deals can be staggering. It's got to be really hard to compete with other potential buyers out there, especially if you're like a general manager who wants to buy out the existing dealer principal who's going to retire in 3 years or 5 years. And, they're trying to figure out a strategy to sell their business. We've seen a lot of activity through the buy-sell market, and that's where most dealers have been using our capital, is to help them finance their growth and to help finance and be able to step into and buy,
They've
these
already
very,
got the frozen asset just sitting there.
yeah. Yeah.
I
And
mean, they're sitting on land that they're never going to cash out of.
that's right.
And truthfully, a lot of dealers out there, dealers, pay attention. A lot of dealers out there. I swear that they've got kids that don't want to be in the business, and all of a sudden they realize they have no legacy. I mean, what's going to give the franchise back to the factory? What's going to happen?
Right. So, I mean, when you're faced with that, I mean, and you're looking at buying a store, it's a really good idea to consider your alternatives and how you can finance it. So, sale-leaseback, this is getting used more and more these days. And it's, for several reasons. I mean, really, we provide all the capital you need to buy the real estate in a buy-sell. And that's a big number sometimes. There's no personal guarantees generally in a sale-leaseback. So that's different than traditional financing, which I know dealers love. I mean, you don't want to put your personal guarantee on the real estate if you don't have to. So, that's something that we can offer. And the key is our leases are also really flexible. So you have the ability to adapt your business, to do things that, the lease doesn't.
You're doing some very creative plans, You and I have spoken about that. We've talked about, we spent a lot of time offline. You and I, we had a conversation last week, and some of the stuff you're doing, this isn't your grandfather's REIT. I mean, no, this is some very creative financing. And you told me about a dealership that went from 12 to 41 points overnight.
Yes, close to overnight.
Well, overnight in my world is, a couple of years.
So that's a great question. I definitely am glad you brought that up because I love this story. I mean, this dealer now has 41 franchises in their group, 5 Honda stores, 3 Toyota stores, 2 Lexus stores, Audi, Mercedes, but there's more to it than just the brands that they have now in their group. So let me kind of back up and tell you the story.
Wait a minute, slow down a second.
Yeah.
You were talking about some pretty high line nameplates.
Yeah.
They were buying some prime blue sky.
Yeah, absolutely. And
I mean, this wasn't a rural Chrysler dealership,
Well, let me tell you, they started out, it was 2 dealer partners. And this was going back a few years now. 2 dealer partners, one was nearing retirement age, and the other one was in his early 50s. He had a long runway and wanted to keep growing his business, but his other partner was ready to retire. And at that time, they already had 12 stores. They had 12 franchises, but it was 80% domestic. So they had a lot of domestic exposure at that time. And, the older partner wanted to retire. The younger partner wanted to stay in the business, but he didn't have the capital, even back then, to buy out, his partner. And the other thing is he had a son in the business, and his son was just getting started out in his, mid-20s at that point. And he wanted to pass the business along to his son as well and build, a nice family business for his son. So we came in as a solution at that time, and we did a sale-leaseback on the real estate. So
the son was basically too young to assume the responsibility yet.
Correct.
I teach a class at Northwood University, and I'm looking at the future of the industry, but these kids aren't ready right now. Mm-hmm. They're getting their education to run and operate a dealership. So what does a dealer do? Tell me.
So great question. And so he wasn't ready yet. We came in, and what we were able to do was, we bought the real estate. The retiring partner got all his cash out of that part of the investment on day one. The remaining dealer, the one that wanted to stay on the business and grow it, he got a significant amount of capital out of the real estate as well. And then he used that cash to buy the stock of the retiring partner. So he was able to get the retiring partner 100% of the value that they wanted for the business. He gained control of the entire business, preserved the opportunity for his son to eventually control that family business. And we were able to remove their personal guarantees, as I said before, too. Actually, after they did that first acquisition of the 12 stores, it was just a couple of years later, they had an opportunity to buy another platform of stores. And They still didn't have built up capital to buy that acquisition plus the real estate. So once again, we funded the real estate, they financed the blue sky, and they completed that expansion. And over the next several years, they just kept buying more stores, one-off little stores here and there, and kept growing. And now from 12 franchises, 80% domestic, to 41 franchises, 80% highline and import. They had much more diversity in their business.
Amazing.
Yeah.
There's a dealer, and I'm not going to mention this particular dealer's name, but there's a dealer in the upper Midwest, and I trained this dealer when he was a first day car salesperson.
Mm-hmm.
I mean, this dealer now owns 20 stores.
Man.
I'm watching, and the strategy is the strategy you and I talked about. They buy a store, leverage the real estate.
Yep.
Buy the second store, leverage that real estate to buy the third store.
That's right.
I mean, you can rapidly grow a company, and like I say, a lot of the public companies are dumping their franchises. I've seen that. It was a reverse trend. So there's a lot of real estate out there, but you got to pay for it.
That's right. And, imagine, so diversification is such an important strategy today too. And so, having one store or two stores is great. That's where you get started, right? But eventually you want to have multiple stores, multiple brands, and even regionally, if you can diversify regionally, that gives you an advantage. We think, the dealers that we are tied with are growing dealers who are looking for more stores and continuing to grow. And I think my opinion is the multi-franchise dealer is going to be much better equipped in the future with the technology of these vehicles to handle trades, to be able to give the best price for a trade that comes in. Imagine, so if you're, a dealer and you have, a BMW and an Audi store, let's just say as an example, and a customer comes in with a Mercedes, they want to trade it in. They decided they're ready for a BMW. So they come into your store, but you don't sell Mercedes, and the car is only 3 years old. It'd be a great CPO, but your used car manager at the BMW store says, I can't really CPO this car. I can't offer the best trade. So that customer might go to the Mercedes dealer down the street and get a better trade value, and may not then end up buying a car from you. But if you had Mercedes in your group, you call up your Mercedes general manager and say, hey, I got this car coming in. Can you CPO this thing? What do you think the best trade value is we can offer? And you keep that customer in your group and keep them away from going to another group.
Yeah, okay, so you can maintain the business. You can keep the business in your family, your circle of dealerships,
and you diversify your business.
A lot of people watch. Thank you for the compliment, Facebook user. Whoa, that was aimed at me. Thank you. Okay. Anyway, there's a lot of people watching this broadcast right now, and they're lurking. They're not commenting yet. Mm-hmm. And I want to see some comments on the sidebar. Ask some questions.
Sure.
Because you're not going to learn unless you do. But there's a lot of people watching this broadcast right now, Dan, that I know for a fact are dealer operating partners, general manager operating partners. They've got a buyout agreement, but they can't afford it.
Right.
I mean, my gosh, I never personally became a dealer for a number of reasons, but one of the reasons was I couldn't afford it. I didn't know you then. Alan Potamkin is a friend of mine, and I was working for the Potamkin organization.
Terrific organization.
And when I left the Potamkin organization, I was in the Atlanta stores, and they sold all of them off. Mm-hmm. And when they broke up their partnership with the Atlanta operating partner, they sold the stores. And Alan Potamkin called me. And Alan Potamkin says, Jim, I've known you for a long time. You're a super performer, which hearing that from Alan Potamkin was a real compliment.
Yeah.
He said, Jim, I want to sell you the Ford store. Mm-hmm. I said, Alan, I haven't got that kind of money. There's no way I could buy the Ford store. And he said something to me that He said, Jim, if you want the Ford store, I can make it happen. You ready for this line? He
Yeah.
said, I am a very aggressive seller.
That's awesome.
I love Alan Potamkin. Yeah, yeah. But he said, yeah, I had already started my company, so I passed on the opportunity. But there's a lot of people out there that are in that same situation, correct?
Absolutely. And it's so true. And what Alan Potamkin said to you, a lot of dealer principals feel that way about their GMs and about the people that are in their dealership businesses, that they want to help them out. They want to figure out a way that that person could also become a dealer principal at some day. We have several examples in our portfolio over the years where that's happened. We had, one dealer I'm thinking of right now. As you tell that story, it reminds me of this one. We had a dealer who had no successor, no family that was ready or wanting to step into the business. And it was a single point, General Motors store, but it was in a major metro market. So it was a high volume, high value store. And the GM was running it terrifically. He wanted to buy out the dealer, but he didn't have the capital. And blue sky numbers. Even if it was a $2 million store, let's call it on revenues or on EBITDA. The multiple on that is, let's call it a 5 multiple. That means $10 million just for the blue, another $10 million for the real estate. Then you got to do working capital, fixed assets. You're talking 15 or 20, $25 million just for one store. This store was even bigger than that. So the numbers were even higher. And, what we did was the owner sold their real estate to us. He took chips off the table. He diversified his assets. He kept the business and he kept the GM in place. The GM kept operating the store. Then eventually, 2 years later, the GM was able to finance the transaction and buy operations from the dealer principal. So now the dealer was able to sell the store to the GM. He was able to retire. He got the full value of his business. And the buying dealer didn't have to come up with the capital for the real estate already because it was already taken care of under the lease with us. So it's a terrific story. And then the best part about it, Jim, you're going to love this, is several years later now, that new owner sold out to a top 50 dealer group just a couple of years ago. And he's now enjoying his classic car collection and just kind of hanging out, because, he was able to do that.
Now you can get that golf handicap down a little bit, And I did business for years and years with Ed Bozarth in Denver.
Yeah,
Ed's one of my better friends, he's retired now, and his son is operating some of the stores.
Mm-hmm.
But Ed was always big on operating partner buyouts. He and another client of mine for years and years, Keith Orr.
Sure.
And Orr had a ton, and he actually created some dealers. I have seen dealers recently expanding. For years, I consulted Tom Dillard. We're talking about Salisbury, North Carolina.
Mm-hmm.
Suburb of Charlotte, Mayberry. But I don't know that I held her as a baby, but I've known his daughter Kristen Dillard for many years.
Yeah.
And the Dillards are great friends of mine. In the last couple of years, Kristen Dillard has aggressively gotten 6 or 7 stores.
Mm-hmm.
She has just expanded that company beyond what her father was doing with the one store in Salisbury, North Carolina. And I'm seeing a lot of that. The new generation dealers are hungry. They're jumping out there. I'm watching Brett Morgan expanding in Florida. All the stores he's buying.
Incredible. Yeah.
You got to admire these people. The entrepreneurial spirit is there, and nobody is afraid of the market. Nobody's afraid of the market.
And that's what we love about this business, is the opportunities are endless. And, the people just keep coming in and buying stores, and, they're coming from, organically from, being operators or, dealership employees to then being dealership principals.
So mergers, buyouts, new construction. Here's another subject we haven't talked about. You know, the manufacturer says you got to come up to factory standards. Let me tell you, I was consulting Motorworks in Chicago. Are you familiar with Barrington, Illinois?
Absolutely, yes.
One of the biggest highline stores in the world.
Uh-huh.
And the former owner, Paul Tamraz, called me and said, Jim, I want you to consult the store. And I said, my God, you're the most successful highline dealer in the country, maybe. You know, what am I going to do to improve your dealership? And I'm not going to tell you what I did, but I substantially was able to show bigger numbers than they already were doing. But one thing, the manufacturers came in, and he's got a showroom that is from here to there in Barrington, Illinois. I mean, just all big showroom. And he's got all these different franchises, Mercedes, whatever, you know. And the manufacturers wanted their own storefront on each of those franchises. So this big building, he had to put a separate door for each one of the franchises, and so the manufacturers overbearing, excessive. They're making you buy certain furniture. You know, Alan Beatty with General Motors a couple years ago had it down to the furniture in the dealership. I mean, he retired, thank God. Anyway, so anyway. The manufacturers are pressing these dealers to improve the dealerships, new construction. You know, the Hyundai dealers, if you got Genesis, you had to build a separate building and it had to meet factory standards. What are you doing in those situations?
You know, and actually I know that store because I grew up in the northern suburbs of Chicago. So I remember that store as it got even built out. So that's a cool example. But you're right. I mean, the manufacturers are continuing to press, you know, dealers, especially on, you know, highline stores or import stores. And even we're seeing it with, you know, Ford and GM, you know, to continue to improve and invest in their dealerships and even de-dual stores and, you know, break out franchises and give them, you know, exclusive showrooms. You know, I got a mega construction example that kind of could illustrate how we helped out.
Give it up. Let's hear it.
All right. So we had a second generation dealer. He had 2 Toyota stores and a Lexus store in a really big market. Toyota was one of the highest volume stores in that market. So it was a very good Toyota store, very successful. Lexus, they had, you know, it was an older image Lexus facility. It was, you know, one of the original Lexus, and then it, you know, really kind of outgrew its space. And the manufacturer was pushing and pushing to relocate and to build and to build. Finally, the dealer said, okay, I'm going to do it. He found a new piece of property, started building a really nice and big, you know, Lexus dealership. Well, as he started construction of this huge facility, one of the competing highline stores in the market went up for sale. It was a Mercedes store. And there was no way that this dealer was going to miss that opportunity. He said, I need to buy that Mercedes store as well.
Tell this, lead into that story again. I want to be sure nobody missed any of it.
You're investing in this giant Lexus dealership, and you're putting all your capital into that transaction. All of a sudden, your competing Mercedes dealer goes on the market for sale. And like I said,
we're gonna buy that puppy.
He wants to do both, right? I mean, like, who wouldn't want to do both? So he says, I want to do both. You know, he has the aptitude, he has the team, he has the market knowledge, he knows the whole industry in that market. You know, he knows he can sell the heck out of Mercedes as well, right? But he can't get it because the bank was skittish. The bank said, hey, look, we're deep in this construction project. It's a very big construction project. You know, and now you want us to finance this acquisition at the same time. You know, they were a little scared. They weren't sure about it if they could do it. So the lender actually is the one who recommended, because we had a good relationship with the lenders too. You know, they recommended, hey, why don't you consider talking to Capital Automotive and figure out if there's a way we could do a sale-leaseback on the new build, which would open up borrowing.
The banker recommended it.
The banker recommended it.
Okay.
Yeah.
And
the dealer had, you know, known us, but said, you know what, this is actually maybe a good time for us to consider it, right? So The dealer talked to us. The banker was happy because it was going to open up capacity within the bank to lend for the acquisition. So what we did was we purchased the property mid-construction. We funded all the construction draws that they already had to date. The dealership wasn't open yet. It was just a half-built building at that time. But we funded it. We funded mid-construction, and then we continued the draws with the contractor and funded every draw as it came up for the construction to finish the construction of the property. And then the bank was able to finance the new Mercedes acquisition. So it worked out great for the dealer because he got the store and built his other store. And the best part, Jim, 2 years later, he bought a second Mercedes brand in that same market and further diversified his group. So, just to be able to continue to grow and buy the next Mercedes store, and he has 2 Mercedes stores now instead of 1, and, a couple of Lexus and Toyota stores, just continued growth. Most of our privately owned dealer groups continue to grow when they do a deal with us. So, our average private dealer, and I'm talking, when we started out, they had, let's call it somewhere between 5 and 6 brands in their group when they start with us, an average private dealer group. Now they've grown through acquisitions and using our capital to our average private dealer client has 18 brands in their group. Much larger, growing over time, using capital in different ways.
And you look at where they started. Most car dealers are entrepreneurs. They're not. I'm going to try to delicately say that they didn't come out of academia. We're bootstrapping, and the success. You live in an upscale community, and your neighbors are talking about their corporate package deals and this, that, and the other. And I'm looking at the dealer that is outperforming financially so many of the people in the community. So, dealer operators, operating partners.
Mm-hmm.
Now, there's a lot of operating partners out there. I've seen so many through the years. I've worked deals in 49 out of 50 states, and I always find out that the general manager has a dream of one day owning that company.
For sure.
And they don't have the capital, and so many of them faded out and never acquired the store.
Mm-hmm.
It never happened. Now, the dealer principal was ready for it to happen, but they didn't know how to put it together.
Yeah. And hopefully we're, a source that they can tap into and consider, as to how to actually make that dream come true.
I look at Chris Baker up north, and he's buying all those stores. There is so much of that happening. If you're not in on it, if you are an operating partner in a dealership and you've got the opportunity to buy it out, but you just haven't got the capital and you don't know you haven't got a plan. This is something you need to do. You need to pick up the phone or email, and Dan will be glad to talk to you.
Absolutely. And we've helped lots of dealers in lots of situations like that.
What else have we not told people today, Dan?
I guess, one thing to consider is, when you're thinking about a sale-leaseback, is it's really extremely important for you to understand who your real estate partner is going to be. It should be somebody that deeply understands the car business. We're very aware of the unique demands that are requirements for the dealers, what they face from their manufacturers, how
a lot of these plans you described to me were very creative.
Yeah.
I have been in the business 49 years. I have seen almost everything.
Yeah.
And I'm going to tell you what, some of the stuff that you've described to me, I have not seen that creativity anywhere else in dealership financing, acquisitions, mergers, new construction, partner buyouts. I mean, you've got these creative plans that are beyond what I have seen. Describe your most unusual your most unusual acquisition. Tell me about it.
We've seen so much. I mean, we got like little stories of, you know, dealership properties, for example, that when we did the investigation on the dealership on the land, it was a former slaughterhouse, and the building was built on a sinkhole, and what was
Oh,
underneath
no,
what was underneath the
no.
building was carcasses from the slaughterhouse, from the cows, and they were all decomposing. And if you didn't know that, you might be you might be a little concerned, because if you bought that dealership and wasn't aware or weren't aware of the risks on the real estate, that could cost you something in the future. So we have a terrific experienced team of men and women in our business development team and in our underwriting group that really have decades of experience, and we know what to look for in a dealership. We know what to look for when we're underwriting, and we can make sure that your acquisition is protected and you're buying a business and investing in a new location that can have a long-term future for you.
Fantastic. What have we not told people that is very important if we leave and not tell them, what would you, 20 minutes from now, what did you say? I wish I had said that.
Well, the one thing on real estate is to think about how you're financing it. A long-term lease, it does remove your interest rate risk, your refinancing risk that you're taking for the long haul. So if you own your real estate and you have a mortgage, you generally refinance it every, let's call it 5 to 7 years. So if you hit a bad cycle when it's time for your loan to come up and get renewed, you may have a capital call. Like, let's just use 2010 to 14 as an example. If your mortgage came due in between 10 and 14, appraisals were off like 35% at that time because of the financial crisis. So a lot of times at that time, lenders were requiring dealers to put more capital in because they'd have to do a new appraisal. The LTV, the loan to value on that mortgage, wasn't within what the bank was comfortable with. And they actually said, okay, we're refinancing. Not only is your interest rate going up, but you have to put capital in because we're not comfortable with the loan to value. If you did a sale-leaseback, you wouldn't have to worry about getting new appraisals or new environmentals on your property every 3 to 7 years or 5 to 7 years. Your CFO would be really happy because they would say, okay, our rent is predictable. We know what it'll cost to operate this business on this location for a very long time under the lease. And we take that risk, actually. We take the refinance risk. We finance our portfolio, and it's transparent to the dealer operator. They don't have to worry about all that. The other great thing is your customers don't know how your real estate's financed. Your employees don't really know or care. It's not like you gave up anything.
You've got the expertise. I mean, you're bringing in the experience. A lot of dealer principals are out there saying, I'd like to, but I just don't know how.
Yep. And I think that's what's so important, is doing it with the right partner. If you're doing a sale-leaseback, you really need to
make. Do you have competition in the space?
Of course we do, and we've had it for
I knew the answer to the question.
26 years. So we've had 35 to 40 companies try to come into this space, and no one has ever passed, like, let's say 10% of our assets. They don't really match the expertise that we have in the industry, and you really need to understand the industry to be flexible and to offer a very good structure for the dealer. And that's what you don't
want to hire a company that's still in a learning curve, folks.
Right.
26 years. You are the big dog in the space. I mean, excuse me. And I'm talking to Capital Automotive. Dan Garces, incoming COO. I don't know what was that, Chief Operating Officer? Okay, yeah. those titles, what the heck. His contact information is scrolling across the bottom of the screen right now. And folks, if you're watching this broadcast on the original broadcast or you're watching a replay, please share this broadcast. Hit the share button and spread this all over social media. Right now, we're on 7 social media channels. We're on Twitter. We're on YouTube. We're on LinkedIn. We're on Facebook in 4 locations. We're in a my secret group that's not that secret anymore. We're all over. We're all over the social media universe. But please share this broadcast. This information needs to get out there. There's a lot of operating general managers out there that would love to buy out the company, or dealers that want to have transition and get out of the business, but they don't know how to do that. They haven't figured it out. This man, Dan Garces, he is your savior. Give him a call.
And Jim, we have a whole team of people that are going to be at NADA. It's not just me, but we have terrific, very experienced, decades.
Tell me about your staff. You got what? 3 people on staff, part timers. What do you got?
Yeah, no, we have a terrific team. We have, our acquisitions team members are really our underwriters and our new business development team. They have decades of experience in this industry. Some of them worked at the captives. Ford Credit for 30 years, 35 years. Some worked at Chrysler Credit for 15 and 20 years. We have terrific experience and industry knowledge, and really know the business and have terrific contacts throughout the business. And all 8 of us are going to be at NADA next week. So reach out to any one of us, and we'd love to have a conversation or a private meeting. We're co-hosting several events. Auto Team America on February 1st has their 30th annual.
Okay, Auto Team America. What date?
That's on February 1st. It's their CFO CEO buy sell forum. Terrific event. We have an incredible lineup of speakers. We have a bunch of co-sponsors there, and hundreds of dealers are already registered for this. It's going to be a terrific event. I mean, we have
they need to seek you out and shake your hand for sure. Yeah. And by the way, I put your cell phone number on the screen.
Thank you.
At 4 o'clock in the morning, give him a call. He doesn't know.
We're open 24/7, Jim. You know that. That's how the business is.
Anything to make a deal. This man is available for you. I put his cell phone number. Think about that. How many people have you seen me interview that wouldn't give up their cell phone number for the world? I mean, I got his email address, his office number, his cell phone number, and there's the website, capitalautomotive.com. You want to find out more about the company before you contact Dan, go on the website. I learned so much. This is amazing. I'm looking at the notes I've got in front of me, and I've got 3 pages. I mean, I've never gone into an interview with this much information in front of me. You guys have done so much. You're so effective. It's incredible. As we wind down, Dan, what have we not talked about? I know I've asked you that several times, and I really want you.
I don't think we missed anything, Jim. I think the key is, consider alternate ways to finance your growth. Be open to the idea of a sale-leaseback because it is very common these days. And it's a terrific way to allocate your capital in a much more effective manner. Your returns on operations are, 30% potentially, whereas your returns on real estate are much lower than that. And if you have limited capital, it's way better to take that money and buy more stores and not invest in the real estate part of that acquisition. Because you can use your capital a lot further by buying 3 more stores than buying 1 store with the real estate. So you're operators, and we are real estate investors, and there are different levels of returns expectations from that. So
okay, so your business is real estate investing.
Yeah,
and with the lease buyback, what is the term is that we're dealing with?
Sure.
What is the
sale-leaseback, a typical lease is, long-term lease. So you have control of your location for as long as you really want. 20-year lease. You have multiple renewal options. Let's call them.
Okay, so they can automatically built into the contract. They can renew it if they.
That's right. That's right. We're not a developer. We don't want access to the land. We want you to stay there as long as possible and to have a very thriving business there. So, you could control that location for 30, 40, 50 years if you really want to. We're happy to give you all the extensions you want, on that location. And we'll do financing of updates on the property. We'll do construction fundings, or if there's an image upgrade 6 years into your lease, we can finance that. So you're not going to have to pay, your own capital.
Motorworks in Barrington had to put all those
Yes,
fake storefronts on the same building.
absolutely.
Fake
And we would
quit it. Manufacturers are brain dead, but they're going to do that.
And we would fund it. We would fund it for them, and they don't have to use their own capital for that.
So anyway, you got the biggest thing I'm concentrating on right now. The biggest value I see from my viewpoint is the partner buyouts.
Yes.
The operating partners.
Mm-hmm.
I mean, because that is such an opportunity, and I see so many general managers watching this broadcast right now. They're not commenting on the sidebar, that they're lurking. They're out there. I'll look at the stats in a minute. But as we wind down the broadcast, they're going to be at NADA, Capital Automotive. He's got people all over the floor. Give Dan a call. This is Dan Garces, incoming COO of Capital Automotive. All the information's on the screen. If you're watching a replay, you can freeze the screen and write it down or enter it in your book. So NADA is coming up 1 week, less than a week, next Wednesday. My gosh.
We're excited.
And by the way, little sidebar here, I'll be there myself. Me and Miss Debbie will be on the floor. Look for the hat, look for the jewelry. It's me.
People won't have trouble finding you, Jim. I know that.
No, nobody has trouble finding me. Anyway, Dan, thank you for the broadcast today. This has been one heck of a great. I've made friends with these. I don't make friends with everybody I broadcast with. If you see me do 1 million interviews, but these guys have become friends. You know why? They're car people. If you're gonna get involved in something that is that near and dear to you as your dealership, the acquisition, buyout, buy sell, you better like the people, and you better think that they're relatable.
Well, thank you for saying that, and we certainly consider you a friend in this industry as well.
Wave goodbye to them.
All right, take care.